All right. So I had some requests here about people asking me about my strategy. So I figured I'll just make a quick video here. Try to keep it quick at least, just to kind of go over what I look for. So I'm going to actually turn the video off here so you can get a full screen. So the first thing I look for, I made a little list here, is I'm looking on the daily chart here. I want to find a key level so I can kind of gauge the day's direction, right? So let's see. So what I'll usually do is I'll look at the daily chart here. Let's say this candle hasn't printed yet, right? If we're coming into that day, obviously we've had to move up. We're back over the EMAs, closed above them. So we're making higher highs and higher lows on these daily candles. Higher high here. Higher high here, higher low. Higher high, higher low. So I would just be looking for a possible continuation, maybe up to like test these highs. So that's kind of like the basic game plan of when I would come into this day, right? So let's just mark that out. Let's say we had the previous day high there. I'll just make it green. So that's like the level I'm looking for, and I'm looking for a move maybe up to this high here. So I'm basically just playing the daily candles. If the daily candles are bullish, I want to continue with that momentum. So I want to find the level that makes the most sense, which usually is the previous day's high for a bullish move. Or if you're looking for a bearish move, if we're in a downtrend, it's the previous day low to see if you can get below that. So let's zoom in to, let's see, let's go to a 30-minute chart here. And you can see this day, oops. So this was that high of the previous day. The next day, this is the 9:30 a.m. Eastern Time open, which is what I trade. So this is basically the stock market hours. So we opened, we came down, we tested this previous day's high. So as long as we hold above that, I'm pretty much only going to be looking for longs. Now, if we were to fail and come back below this previous day high, then I would be more cautious about looking for longs, right? Unless we were to reclaim it pretty quick. But since those daily candles were pretty bullish, you would expect any possible dips like down into here could get bought back up. So that's why as long as we're above this, I'm pretty much looking for longs. So then I'll zoom into the 5-minute chart. Let's go back to this day again. So this is the level I'm watching to see if we continue to get bullish momentum to the upside. Previous day's high. So we open, right? And then the next thing I have here on my checklist, is, all right, so once you have your key level for your day's direction, previous day's high, next thing I'm looking for is I want to see some momentum and I want to see expansion. So I go to the 5-minute chart, is my excuse me, my go-to chart for kind of gauging how we're moving during the day. So I have the 15 EMA, the 50 EMA, and the 200 EMA. So the teal line here is the 15, the green's the 50, and then the 200 is red here. So you can see right off the open, these EMAs were still in a bullish alignment. The 15 is above the 50 and the 50 is above the 200. But they're mostly kind of sideways, right? So I like to usually wait at least the first 15 minutes. Usually my best trades actually come like an hour or more after the open, right? After the 9:30 open. So you can see we kind of failed to move up here after this dip, and we moved down, but we held this key level, right? The previous day's high and the 200 EMA, right? So it's showing that buyers are holding this thing up, and we get a nice little double bottom. And then you see a pretty strong move up after these sellers fail here, right? Sellers are trying to roll it over. Buyers step back in, create a double bottom here, right? First bottom, second bottom, right on the 200 EMA and the previous day's high, right? So I'm looking for momentum, right? So you get this strong move up. The other thing I had on my checklist here is you want these 15, the 50, and the 200 to be sloping and spacing, right? So they're kind of starting to space after this push up. They're aligned bullish. The 15's kind of starting to slope up here a little bit, just kind of like how it was here. But I always like when the move originates near the 200, and it's always great if you get a retest on your level, right? So they kind of faked people out here at the open, rejected this high, and then came back down. Had this off the open gone up, right, and had a good push, a better push than this, obviously, like a good close, then I would maybe be looking for a pullback to enter. But because it didn't do that, I was just waiting. So it came down, like I said, double bottom, held previous day's high level here, and then we had this strong move up here, right? So the EMA still stayed in bullish alignment, and now we're kind of starting to see these EMAs starting to kind of push up and slope and get a little bit of space on the 5 minute. Now the 5 minute takes a little bit longer to happen than like a 2 minute, but this 5 minute for me gives better signals than the 2 minute. But I will also look at the 2 minute as well, but for today I'm just going to look at the 5 minute. So another thing you can use, if you don't like using the EMAs, you could just use the RSI, which is something that I used to use, where to kind of get an idea of momentum, right? You want to see the RSI get above the 50 level, right? So if you don't want these EMAs, you can just look at the RSI really. You could see we came down, held the level, and then we had the strong move up, and we get back above the 50 here, right? So then we move back down, and we hold above the 50, and then we get a nice little hammer here. So so you can use, just the EMAs. You could use just the RSI. I like to kind of look at mostly the EMAs, but I'm going to start bringing the RSI also back into the picture for myself. So we had to move up back above the 50, and really I want this 15 EMA and the 50 to be in alignment for my trade at the very least. So those are good. We're above the 50, so we're looking good. So now it's just waiting for a pullback, which is, well, it's actually not the second thing on the list here, but it's the fourth thing. But another thing to keep in mind here that I look at is looking at ES and NQ together, right? So I always want them to be in sync with each other, right? I want them to be agreeing with their direction. So you got your key level, right? Previous day high bounced, and it bounced off the 200 EMA as well, which is kind of a key line in the sand for me for kind of bigger picture intraday. So that was big. And then we got our momentum, right? We came back, we reclaimed the 15 and the 50. The RSI moved above the 50 level here, right? So those are showing that your bullish momentum is back, right? So that's the second thing. And then checking to see if I'm trading NQ, I want to make sure that ES is also looking bullish, right? So if ES we're under its 200 and maybe the RSI is under 50 and we're under the 15 and the 50 on the EMAs, then this would be a less quality setup to take on NQ right here, right? But you can see if I put the cursor on, we get this move up on ES on the left side here. You can see it's above its 50 and it's above its EMAs. So we're kind of in agreement on ES and NQ, and that's something that's really important. So really the best moves, the best trends, they happen, the cleanest moves happen when ES and NQ are both on the same page. And that's what we have on this setup here. So let's go back to my checklist. So we got our key level, previous day's high, right? Bounced off it on NQ. We got our momentum. We're above the 50 on the RSI and above the EMAs. We got ES and NQ both in sync. They're both bullish. They're both above their EMAs, and they're both above the 50 level on the RSI, right? And then the next thing I'm looking for is just a pullback, right? So ideally, I want to get in on the first or the second pullback. So you can see this is really, you can count this as the first leg really, right? So with my strategy, you're never going to catch the top or the bottom. Like, I want the market to give me clear direction. I want to see good momentum before I'm looking to get in on the trade. So I don't need to catch the bottoms. I don't need to catch the full move. I'll just let the market tell me what it wants to do, right? And then I react to it. So I'm not predicting. I'm letting the market choose a direction, give me a reason to take a trade. So we get this nice move up on ES and NQ, and then I'm looking for the first or the second pullback, right? So this right here, we get the move up. This is the first pullback, right? And you can see price holds, on these EMAs. You get a nice lower wick, a nice hammer candle. And also, if you look at like levels, I like to look at like bodies and previous 5-minute candles. This was at one point was a little resistance. We break it, come back down, retest it, right? So it's a good area of confluence, right? So you get to move up, you kind of break where these sellers are at one point, and we move back down, test back on it, testing the EMAs as well, right? Also holding, above the 50 level on the RSI, and then you get the move up, right? So I like to kind of add in these levels as the day goes on the 5-minute chart, so I can kind of see, where the previous buyers or sellers are at to kind of get intraday levels on my chart. So you could also put this one on there as well. You can see price wicks and it closes back above it, so that's also a good sign. And then my entry, let's see, go back to this. So we get our first pullback, right? We're retesting a level, right? We're retesting this area. We're retesting the EMAs after breaking them. And we're also, like I said, or like I show here on this, near the sloping 15 EMA is ideal. That's really ideal when you get the retest back near that sloping 15 EMA. Because when the 15 EMA is holding on pullbacks, it just kind of shows that we're in pretty good momentum and that buyers are being more aggressive. So, or sellers if we're sloping down. But it's sloping up, it retests on it, and then we move up. So how could you get in on this, right? So you get the pullback, and then you get the entry signal that I look for, right? I'm looking for price action. I want to see signs that buyers are interested, right, after we pull back. So first you get a little wick here on this candle, and then you get this big wick here on this candle, right? So honestly, after that, you could just get in, right? You see these wicks happen, you can get in as it's starting to wick back up, what I like to do is wait for the next candle to open. And then this was perfect, like kind of picture perfect on this, because this one opened, it went red, right? At one point this candle was red, and then it flipped back green, formed this bottom wick right on the 15, and we broke the high. So you can get in literally right above this red hammer candle, or you can get in as it's turning green, or you could just get in down here. It just depends on what your risk tolerance is. I like to wait kind of to see it moving back up personally, but at times I will get in back near the EMAs before I get like more confirmation. So, you know, the more confirmation you wait for, the wider your stop's going to be. So, but, you know, if you get in down here near the EMA before you have any confirmation, then it's like, all right, where's your stop going to be? You know, you'd probably need it underneath previous day's high level, underneath this structure here, right? So if you get in on the EMAs before any kind of confirmation, your stop probably has to start down here. If you wait for more confirmation, then I'd be putting my stop, you know, underneath this hammer, somewhere probably down here to start, just in case it wants to come down a little bit farther again. I usually will put like a hard stop in like here, and then as I see it starting to work more, I'll move it up tighter, you know, underneath here, right? So we get the move up, we come down, retest here, get the wicks. Like I'm looking at the price action. I want to see the buyers pushing price back up, holding, you know, on any retest down in this general area. Oops. So this is actually a trade. Well, actually, I think I took a trade on this on the 2-minute chart originally. On this little pullback, I got in. And I think I took a break even on it, and then I got back in once I saw this 5-minute starting to work. So I took a break even, and then I did get in on this trade on last Wednesday. So this is honestly a really good setup. So let's go back to the checklist here. So that's the trade checklist to get in, right? So you got your key level, you got your momentum. You want to see momentum and expansion, right? So you want to see a good move, right? You want to see your EMAs in alignment, at least the 15 and the 50, right? And like I say here, I always prefer the move to originate from near the 200 EMA from a narrow state. A narrow state just means the EMAs are kind of bunched up together, right? Sideways consolidation action. That's the ideal scenario for a trade to start from, right? So you got the key level, we got the move, right? Showing momentum, EMAs in alignment, RSI is optional, right? Over 50. Once it's over 50, you know, all right, it could be good momentum to the upside. You know, it's in alignment with the EMAs as well. You know, we're in business. So, and then you're checking ES to make sure it's also in alignment with NQ if you're trading NQ, or vice versa. If you're taking the trade on ES, I prefer NQ to also be in alignment with ES. Then you're waiting for that first pullback, right, for an entry. And if you don't get the first pullback, you know, you can try to look for the second. This one doesn't really give you much of a second pullback. It's kind of, I guess you could call this the pullback here, which I actually did take this trade to on the 2-minute chart. But I mean, it's a push, it's a pause, and then a continuation. You know, it's kind of like a little bull flag, but it is a little bit extended from the 15 here. I do prefer a little bit deeper of a pullback to kind of maybe retest a little bit deeper into this area, but you don't always get that, right? So you kind of have to take what the market gives you, but you also don't need to catch every move too, right? So if you got in on this move, right, you know, your stop would go under here. If you got in around here, if you got in around here, your stop is down here until this confirms more, and then you move it up. At least that's how I would play it. Let me go back to this. So first or second pullback, and then stop behind your structure, right? So this is your entry structure. After this hammer forms and you get the move above it, I'm in, and my stop is going below it. And then how I usually play it is I'm looking to get out, at or near new highs or lows. You can see I had this target here, which we put on earlier. I think I actually got out right near it, and then I trailed out for this leg up, right? So, I'm getting out typically somewhere near the previous high into strength on the first piece of my trims. I like to get out in pieces. I don't like to get out all at once because price, could move up. And if it reversed here and came all the way back down, I'd be probably pretty annoyed that I didn't take anything off. So for me, I like to trim out a little bit here and at least lock in, half or a third or, whatever you're comfortable with. Then if it keeps going, you can continue to scale out or just trail candles. So once price gets away from these EMAs, right, away from this 15, that's when I want to be trailing because I don't really want to hold for a big pullback to the EMA, right? Although, I would be anticipating if this is a decent little trend, I would be anticipating, 3 moves for it. So, which actually I have here. So, usually a lot of these moves, they'll have 3 pushes on them, right? So on this one, like I said, we're always going to probably miss the first move for the most part. So you get the first move here, you pull back, first pullback. Second move, very small pullback. This is harder to catch. If you were to take this, you could just wait for this candle to close and then take the break of it above it after it closes, right? Or if you want to be more aggressive, you can get in as it breaks this red candle's high and just put your stop pretty much underneath the structure here. But you do risk price rejecting and then coming back lower, which can happen a good amount of times. Obviously this time it didn't happen and we just went up higher. So let me bring this back up. So that's the idea of 3 pushes. So 1, first pullback, 2, second pullback, and then third push, which this is kind of a little smaller push. So I just count that as 1 here, pretty much. Obviously nothing is ever perfect, but you get the idea. On most of these trends, you usually get 3 good pushes. So, and then the other thing I have on here for key points is measured moves. So basically, once you have 1 good leg, you can kind of just duplicate it and then kind of get an idea of what the next move could be. So you put it on the bottom of where the trend started for the next leg up, and you can see it's pretty close to what you get for this move. And then if I move it up to this one, oops, you can see, we don't get all of it on the third leg up, but you get a decent amount of it. It's just a way to kind of gauge, how far price could go on each of these legs after you get, the first leg and then even the second leg. So typically I would say the second leg is usually the biggest because it's like the first pullback. And then by the time you get the second pullback, people are starting to take profits more onto this third leg here. So it usually, from what I've experienced, it doesn't get as good of a push as the second or even the first. So, and then the third pullback, as I said here, I look for the first or the second pullback. The third pullback isn't as reliable after a good move like this. So I typically steer clear from taking the third pullback. The first and the second are the most reliable from what I've seen. So, all right. And just to go through the rest of the key points here. So yeah, if the 50 and the 50 EMA is flat, and it's best to sit out, wait for momentum to return. Yeah, so you can see here, price comes back after that third push, and you can see what happens. Like we try to make a new high, we can't, and the EMAs are starting to flatten out here, right? over time. So actually, I got chopped up a little bit in this, trying to take more trades on this day here. So, having the discipline to kind of walk away after you get, a good move like this is really important. And just knowing that after that third push, we're most likely going to be due for either a bigger consolidation or a bigger pullback, and it could be choppier, especially, coming into the lunch hours, after, 12:30 into the 1 o'clock range. It can definitely be choppy. And this is the day before Thanksgiving, so this is expected. So that was a rookie mistake on my part, trying to push it on last Wednesday. Let's see. So yeah, when those EMAs starting to flatten, it's best to wait for momentum, right? So, if we were to, break like the flag here, this bigger flag, after holding this level, right, and get follow through, then you could look for a pullback. But obviously this is later in the day anyway, so let's see. So it's key, so you don't need to catch tops or bottoms, right? So like I said earlier, I don't need to catch this bottom. I don't need to predict that it's going to bounce. Yeah, you could get in and take this double bottom, right? Or take a trade right on previous day's high level if you wanted. Me personally, I'm just waiting for the clear momentum, and I'll just wait for my pullback entry. I don't need to catch the bottom, right? I can get my piece of the move somewhere in the middle, right? I'm just aiming for the middle. I want the trend to be clear. I want the momentum to be clear. I want my key level to kind of be the first clue. We get the momentum, we get the pullback, we get the continuation, right? And I can get some piece of this move. That's all you really need, right? You don't need to pick tops or bottoms. Let's see. So yeah, entering, it's always ideal to enter near, like I said, the sloping EMA, and exit when price gets away. I mean, in general, that's what I'm looking for. I want to be entering, near these EMAs when they're sloping, right? The 15 starting to slope here, entering on the pullback near it, getting out when price gets extended away from it. Like, you could literally just take this trade, get out at the new highs, and call it a day if you wanted. And that would be a great day. You can always add back. Yep. So if you end up getting out all your position, after a good push, you can always re-enter, right? If the trend is still valid, if you're seeing the buyers are still interested, you can always get back in. And that's actually what I did on this day too. I got, like I said, I got back in on this break here, kind of anticipating that we were going to break this level. And we did. We broke and retested and moved higher. So, that's why it's a good idea for me to, kind of trail out when we get extended, because you never know if the trend's going to keep going. Like, this thing could have reversed and came all the way back down, and just came all the way back down previous day's high. Like, you never know what can happen. So it's always good to kind of lock in, scale some out, and then trail out. And then you can wait and see what happens on the pullback. Obviously, this one didn't really have much of a pullback. It just kind of went. But a lot of the times it will pull back near the EMA, and then you just kind of read it. And if it is one more, if it's another good setup for an entry, then you can get back in, right? The trend is still valid. It's, the first pullback or the second pullback. So if we were to come back near the 15 here, you could take that trade if you wanted. Or like I said, you could take, this engulfment here. It's just a little bit extended. So just be careful when it's a little bit extended. You want it to go. If it stalls and comes back down, you're probably going to get, stopped out if your stop is here. Let's see. Yep, so you don't need to catch every move, right? So we don't need to catch tops or bottoms. We don't need to catch every move. We take our piece, right, of the trend, wait for the trend to be clear, wait for the pullback, get in, right? And then you take your piece of it. Yep, kind of the same concept. You don't need to catch the full move, right? Same thing. Like I don't need to get in from here and hold it all the way to the top. Literally, I'm aiming for somewhere in the middle. Take your piece, and be grateful for it, and wait for the next setup. Yes, this is a good one that I try to practice, to fully accept the risk of the trade before you enter. Because a lot of people, including myself in the past, I'll move my stop to break even too soon. All right, so let's say you got in here and price moved up. And then once it moved up to this area, maybe you put your stop at break even. And then what happens? Price moves back down on this wick and it comes to your break even and stops you out, right? But the trade is still valid. We're above the EMAs. Just because price comes back to your entry doesn't mean you should be getting out. It's still valid. Price would need to, break back below this low for me to really say that the trade's not working, right? Just because it retraces a bit back into your break even, for me, that's not a reason to get out, right? I'm fully accepting the risk of the trade before I enter. It's either gonna work for me or it's not. I don't want to suffocate it. I want to give it time to breathe and give it space to work. So that's just how I like to do it. I know some people like to be tighter, but I find that I get stopped out and then I'll get annoyed when it takes me out at break even and then goes, in my favor after I'm out of the trade. So, put your stop in a position where the trade is invalidated, right? If the trade doesn't work, then you want to get out, right? If this hammer doesn't hold up after it prints, then that's not a good sign, right? If price closes back down here, it's not a good sign, right? Maybe it's got to come back to test the 200 again. And then it's the same thing. Then you're waiting again to see what price wants to do. If it ends up reclaiming back again, you see the momentum back again, then you can look for another long again. But you don't want to hold a loser, right? If the trade's showing you that it's not going to work out. So we cut our losses, at the invalidation points, right? To fully let the trade work and do what it needs to do. Because NASDAQ especially likes to come back and stop people who move their stops to break even too soon. So if you notice that's been happening to you, try leaving your stop a little bit longer. And then, once we make these new highs, then you can start trailing, closer to your break even. You get the new highs. Once this candle prints here, I wouldn't want it coming back underneath this low once this candle prints. Like it shouldn't come all the way back down here for the most part. I'd probably put it like maybe under this candle. But ideally, once this thing already came down and wicked and it closes up here, like it really shouldn't be coming back much further than this area. So, you'd be safe to trail it under this 15, somewhere in this area is kind of how I would be doing it. All right, let's see what else we have here. Fully accept the risk. Yeah, wait for the structure to form. Let's move this down. Oops. Okay, so the next one was no entries after 1 p.m. It's kind of just like a rule for myself, which I didn't really obey last week. But I know that for me, like I said, a lot of the best trades for me happen like after the first hour, like when the trend is becoming more clear, the direction for the day is clear, because they'll screw around with it sometimes for the first hour, shake some people out before they choose the actual direction. So, being patient to wait for that clear direction, before you take the trade is really key. And then, once, lunchtime, sometimes it can keep going up until 1. So, I'm still open to taking trades till 1, but most days I want to be pretty much not entering, any later than usually 12:30, but 1 is really the very latest, because usually after 1 o'clock, I'm starting to get tired anyways from looking at the screens and just mentally fatigued. So it's just a good rule of thumb for me to be done after 1 p.m. if you take 3 losses, for me, like, that's a sign to walk away for the day, right? It's just not your day, right? Keep the red day small, and walk away. Either the market isn't in great conditions, or you're just not trading well, or maybe both, right? So, and usually, if you go beyond 3 losses, that's when, you'll start going on tilt and start sizing up to try to make back your losses, and it's just not a good thing. So, if you can walk away, if you take 3 losses in a row, keep that red day small, right? That's key. Because think about, your whole month, right? If you average, let's say your average winning day is like $400, right? Now, if you take a red day that's $1,000, it's going to wipe out, at least a couple of your average green days. So we know we're going to have red days, but we want our red days to maybe only wipe out 1 green day, right? Or even less than that, ideally, for your average green day. So, keeping those red days small is huge. And then something for, if you're trading on a prop firm account, this is kind of how I like to think about it. My max daily loss, typically somewhere around 20-25% of my max drawdown. So, and then, whatever that number is. So let's say you have a $2,000 max drawdown. So that would be, your max daily loss is $500. So if you divide 500 by 3, so you get 3 chances basically, which would be obviously 3 losses if you're to lose all 3. You're risking somewhere around, $150, maybe a little bit more, so that you stay below your max daily loss of like $500, give or take. So that's just kind of some math of how I do it. Let's see. And then another important thing here, if you are green on the day, right, and you keep trading, you have to have a plan, right, for how much you're willing to give back. This is really important. So let's say you take a win and then you have another win. Like, if you're going to keep trading, how much are you willing to give back if you take another trade? If you're up $400 after 2 trades, how much are you willing to give back? So, and you have to be okay, right? You have to accept that before you take the next trade if you're going to take another trade. You could just say, all right, if I get 2 wins, I'm just going to walk away. Honestly, I think that's a great thing to do. If you want to keep pushing it, like if you're seeing good momentum, and you want to take another trade, know how much you'd be okay with giving back, whether that's, $100, $200. But if you give back, $200, then you just lost half your profits. So are you going to be tempted to take another trade after that, right? If you're up 400 and then now you're only up 200, are you going to be tempted to take another trade? For me, yeah, I would be. And that's kind of what I did last week. I was up and then I gave back too much and I didn't follow this plan that I have here. So this is actually great reminders for myself as well. So, if you're going to keep trading after you're up, say to yourself, all right, I'm willing to give back whatever it is, $100. Okay, so I'm up 400. If I give back 100, I'm still be up 300. It's still a good day. So that if you see a good setup, you're still okay with taking it. You fully accept that risk of giving back $100. You size accordingly. And if the trade loses, right, you're just going to walk away, right? If it wins, then maybe you're up, 500 now. And then obviously if you have 3 wins, I would just be calling that a day. But if you want to keep going, I would just stick to that same process about how to keep your day green. Asking yourself, what am I emotionally okay with giving back, right? What am I okay with risking, right, to take another trade? Because if you're not okay with risking it, right? If you're up 500, if you take a loss to lose 200, now you're only up 300. Like, are you okay with that? If you're not going to be okay with that, then don't take another trade, or take a very small size, right? So everyone's different. Some people like to increase their risk when they're up. Me personally, I don't like to let a decent green day turn red, because then it can lead to over trading, right? So once they're green, try to keep them green. So, all right, guys, that's all I have for this little strategy video. Excuse me. I'll bring the video back on here. So, just to kind of recap for the trade checklist, we're looking on the daily chart, the daily candles, to find that key level. To kind of base our day around, right? So if we're bullish on the daily candles, I'm looking at the previous day's high to see if we can break above it. Another thing with that, right? Even if we haven't broken, like let's say we opened below the previous day's high. Let me just move this. Let's say the previous day's high was, up here, or even right here. That was the previous day's high. I'll just make it green again so it's clear. You can see we rejected this level here, but if that was your previous day's high, you could still get in before the level breaks if you see momentum come in, right? So if I know this is my key level and I see momentum come in, right? We hold, the 200 EMA, the EMAs are aligned bullish. I'd be willing to take this trade even if we haven't broken the level yet, anticipating that, okay, we have a double bottom, we got the 200 EMA, like I'm anticipating that we're gonna possibly break this level here, because if the sellers were stronger, they would have probably pushed it back down here, but they didn't, right? The buyers held it up. We had a good push, right? That's the momentum. Let's go back to our checklist. Right? So we have our key level. I know what level I'm looking at. It's this level, right? But we already have momentum, right? The EMAs are aligned. We're above the 50 on the RSI. ES is in sync with it, right? This is really the first pullback right here after this strong push up, right? So I would be willing to take this trade even though the level hasn't broken yet. So just something to keep in mind for looking for these kinds of trades for your key level. So, but yeah, so you got your key level. We want momentum, right? Using the EMAs, using the RSI if you want. If it's over, I want it to be over 50 for longs and under 50 for shorts. And most of the time, I want that move to be originating from near the 200, right? I want these EMAs to be kind of bunched up sideways before we get the move. That's ideal. And you can, right, if we get way extended from the 200 and then the 15 and the 50 cross back down, you could look to take a move back to the 200, if you're at like a key level, right? It's harder to trade, right? It's harder to predict that, but it's still doable. Just keep that in mind. But for the most part, I want to be trading, shorts below the 15 and longs above the 15. Because sometimes if we get really extended, let me see an example. Here's kind of an example. So we got a little bit extended here this day, and we lose the 15, we retest it, and then see how this 50 kind of flattens out here, and then the 15 is sloping down. Like that has a better chance of the 15 working when the 50 is flat, right? And then you get to move down to the 200. So obviously not as good of a risk reward when you're going back to the 200. But it also depends on how extended we are. So I don't know if there's any other good ones that I can find for an example right now, but for the most part, I like when the move originates, from near the 200 EMA. It's not always going to be perfect like that. Like here's one on this day. There's your strong move. You get the pullback. Even though we're under the 200, look at this 15 sloping up. We're above the 50. right? We're above the 50 on the RSI. So like, this is like a nice bull flag here, right? You know, you could wait for this candle to print and then take this little retest here. But like the main thing is we got the momentum, nice flag, we get the first pullback, right? Back to the checklist. And this one, I'm not even using a key level on it, but just to get the idea, not everything is always going to be perfect with these, like with the 200 being perfectly where you want it, right? If there's good momentum, right, especially like the 15 and the 50 crossed, the 15 sloping up really hard, like this is most likely going to get continuation, right? So just something to kind of be aware of. Nothing is ever going to be perfect in trading majority of the time, right? Things are going to be, you know, a little bit, you know, messy sometimes. So just take everything with a grain of salt. Think of things as more of kind of zones than actual perfect lines, right? So, all right, guys, if you have any questions, you can comment down below, or I do have a Discord that I'll leave in the description as well, that you can come in there and ask questions. And I try to trade, you know, every day lately, and kind of give kind of my I guess my description of what I'm seeing on the charts, and kind of chat with some other traders on there, and we kind of share our ideas and trades. So if you want to hop in there, you're welcome to join. And then, like I said, if you have questions, it's probably best to ask in there, but I'll also come on here to see if there's any comments I need to respond to. So thanks for watching, guys, and I'll see you guys on the next one. All right, later.